Hello and welcome back, everybody. That was a calm week. We have seen big news, but the market seemed to be more rational in its reaction to the headlines. Nvidia is impressing again, oil and gold are on the edge, and a gaming company's share price just jumped by over 2,000%. This is All Access, where we dive into the market's highlights and learn where to look next to help you make more informed trades. I'm Yoli, Deriv's head of marketing, and with me, as usual, is Prakash Bhudia, our head of product and growth. Welcome, Prakash.
Thank you, Yoli.
So let's start with the US Consumer Confidence Index, or CCI. It jumped in May after 5 straight months of declines, and that sent consumer confidence to its lowest level since the onset of COVID. Also, the personal consumption expenditures, or PCE, came out softer than expected, signaling an inflation slowdown. First of all, can you take us through what CCI and PCE are and why do they matter?
The Consumer Confidence Index measures how US households feel about the economy now and over the next 6 to 12 months as well. So, as you mentioned, since the consumer spending drives about 70% of US GDP, shifts in that sentiment can be an early signal of economic turning point. So, for example, expectations number less than 80 usually signifies possible recession warning. So rather than the 98 rebound in the current index, which the traders are focusing on expectations more than the current index. So essentially, that means that even if people are feeling better now, they're still worried about the future. So one other thing to point out is a trend often matters more than a single data point. So I think it's not really surprising why the market has shrugged it off. We've seen stocks ending the week pretty flat. So while the 98 rebound is encouraging, I think the market's focused on the expectations remaining under that 80 threshold.
It seems like, consumer confidence jumped. Wouldn't that affect the markets? I know you mentioned, it's based on a trend, but why didn't Wall Street seem excited about this? Why did they react the way they did?
Yeah, so I think investors generally are focused more on hard data, so job creation, wage growth, inflation, and until we have more news on these numbers, these kind of the sentiment surveys, I don't think will move markets much unless we start seeing a strong trend. So, for example, over the last 5 months. January to April, the trend was down. So let's see how the next number comes out, and of course the market also will be interested in whether the expectations are increasing as well. And we still have a lot of uncertainty, so it's not surprising that the expectations is a little subdued.
Okay, well, another big event, or so we're told, that didn't seem to affect Wall Street significantly was, the trade court judge who ruled Trump's Liberation Day tariffs were unconstitutional. However, it felt like the markets were not sure how to react. On one hand, we know that at least some of these tariffs won't go through, but on the other hand, uncertainty levels seem to be they seem to have become like uncertain. It's compounded uncertainty. What should we make out of that? What kind of news should traders keep an eye on?
Yeah, so it's very interesting, right? You see essentially the news coming out, and the initial market reaction was for stocks to rally, and then the government straight away filed for an appeal. So that effectively meant that the status quo is still in place, meaning the tariffs will remain active from the 1st of July. unless it's explicitly blocked by the appeal court. So what essentially happened is we had news, but nothing really changed. So it's not surprising that these initial moves quickly reversed once traders realized that the legal outcome won't change the enforcement yet. The other thing is there's two tariffs, right? You have the Liberation Day tariffs, which are the US government broad tariffs, which are currently under legal appeal. So that includes the 10% universal tariff, which is nearly on all US imports. And then it also includes the 11 to 50% reciprocal tariffs on countries with higher duties on US goods. Interestingly, this ruling does not actually include the tariffs on EU imports. And that's a separate action. So that the key date here is July the 9th.
Why do you think the courts treated that differently? Those
Um,
set of tariffs.
I'm not exactly sure what the legality behind keeping it separate, but you can assume that if they've ruled on the Liberation Day tariffs, then they may also rule on the EU tariffs as well. But essentially, this will also go ahead on July the 9th, unless there's some other ruling. So that includes the 50% tariff on EU goods like cars and wine and cheese and machinery. So this month is super important for talks, right? If the
Yeah.
US EU talks fail and the tariffs go ahead, we're likely to see retaliation from the EU as well. So traders are definitely keeping both ears to the ground, and they're focused on the timing, the enforcement, how this appeal is going to go. And yeah, it's basically a countdown.
So let's talk oil. Oil spent this week within its consolidation range of 60 to 65, just like you said last week. But it seemed to spend more time in the lower end of this range. At the same time, gold did climb up a little, but also stayed within a tight consolidation range of about 3,200 to 3,360. Are strategic assets being pressured by a stronger dollar, or is it negative sentiments happening, at the same time?
So I think it's a bit of both. Crude is rebounding after OPEC Plus stuck to a modest 411,000 barrels per day output increase for July.
Mhm.
And that was less aggressive than the market was pricing in. That's why today Brent is up over 2%, hovering above 64. We have WTI that's climbed
Mhm.
above 62. Um, so interestingly, yes, as you mentioned, the support, the 60 support was the bottom in the price last week. So we're seeing this restraint in supply paired with a drop in US rig counts. We're also seeing some strong gasoline demand. So into the start of the summer. So that is helping to tighten the near-term balance. So in the last day or so, the momentum is positive. Technically, I think so. This $60 zone remains key support um, for WTI, and I think if momentum continues, traders will start eyeing 65 to 67 as the next resistance band. So I think the broader risk sentiment and Chinese demand signals will remain key swing factors. For gold,
Mhm.
so I think it's right. I think it's largely a move on the back of continued uncertainty
Yeah.
and bolstered by the weaker dollar. So we're seeing that the continuation of that resilient demand for safety. And we do have a lot of data out this week, and it's also a FOMC month. So I think if the data this week, the US data payrolls on Friday disappoints, we could see gold climbing up towards the 3,450 and maybe even making a move to that 3,500 level. In other markets, forex, we're seeing a continuation of that dollar weakness narrative.
Yeah,
GBP. Yeah.
let's talk about the euro. It made a quick visit to that $14 plus level a few days ago, but it seems to be stuck in that $13 zone of, far away from April's gains. So if the euro fails to hold its ground against a stronger dollar, should we expect a retreat back to the levels we saw in the first quarter of 2025?
So in today, the Euro USD is trading about 1.14.
Okay.
So we are still, like I said, we're seeing even this morning the soft dollar narrative. So we do have the ECB this week. However, there's a well telegraphed cut which the market's expecting, and this cut would bring the deposit rate down to 2%. So although the cut is expected by the market, the real focus here will be on the guidance and whether Lagarde hints at a pause or signals more easing. So over here, what traders can look out for is a hawkish surprise, i.e., signaling that this could be the last cut for a while, is likely to push the euro higher, especially with the dollar under pressure, and any dovish tone, i.e., signaling that another cut is likely, would cap the gains on the upside and maybe send euro USD lower. So with the pair trading at about 1.14, we have resistance around 1.145, 1.15, and the support is close to 1.12. So traders will also be looking at the yield differential between the Eurozone and the US, and any narrowing of the yields will favor the euro.
So, Prakash, let's go a little micro. One stock was sure swimming against the current, or a little bit faster, to be fair. Last Wednesday, Nvidia stock recovered losses of 6 months, driven mainly by positive revenue numbers for Q1. So, has Nvidia healed from the deep seek shock and other macro shocks, or it was hit with over the last few months?
So interesting that in terms of the earnings release, Nvidia delivered a stellar Q1 and a very solid Q2 guidance. And the initial reaction was for the stock to rally post the news. But interestingly, since then, it's given back a lot of those post-earning gains,
Yeah.
not necessarily because of the weak fundamentals. We see that they're strong, but as a part of a broader market pullback. So since Nvidia is seen as a proxy for AI development, I don't think this is specific to the current moves are specific to Nvidia. I think it's this macro driven risk aversion now, which is creeping back into mainstream narrative. So tech now has this morning has been broadly under pressure. So if you look at valuations, yes, they do still look a little stretched. I think the forward price earnings ratio is above 30, and there is still that export risk to China. I think this exposure. I think the market puts it at about 4.5 to 5 billion, which may not, while not directly hit by the July the 1st tariffs, it will be vulnerable if the US tightens the AI chip restrictions, or if China retaliates. So there's still a lot of uncertainty here, which could impact the stock price.
Initially, folks thought the downturn in Nvidia's share price was related to DeepSeek, but it sounds like what you're saying is that there's also, Nvidia can be impacted by the tariffs. How so?
There is an export risk. I think there's some exposure with China. If the US then decides to expand tariffs to include AI chips or further restrictions, and if China retaliates, that will be weaker for the stock price.
Makes sense. Okay, this week we've also had Sharplink. It's a Sharplink Gaming's stock, which jumped over 2,700% from a penny stock to real headline grabber. It had announced a 425 million Ethereum treasury strategy. That's a massive move for a company that's sub 100 million market cap. So, the crypto community quickly called this, Ethereum's potential sailor moment in reference to, how sailors been buying Bitcoin. But Ethereum itself barely reacted. After initial 10% pop, it quickly retraced following a broader crypto correction trend. So, there was a Reddit post where somebody had said Ethereum upgraded and the market yawned. So what's your take on it? What does it take for Ethereum to make a comeback?
Firstly, the Sharplink news, I think it's probably more of a short squeeze rather than this macro catalyst. So
what's a short squeeze for some of us who don't know that?
So it's a market phenomenon that occurs when the price of an asset like Sharplink rises very sharply, forcing traders who had bet against the asset, i.e., those who had shorted it, to buy it back quickly to limit their losses. And these traders who are shorting the stock, they don't actually own the stock, right? They're essentially borrowing it from like large funds, like a pension fund, etc. And they usually have leverage as well behind it. So what happens is when retail traders get together in a large group, like we saw with Reddit and GameStop and AMC and these stocks, is they can buy up the free floating shares in the market, where the pool of shares reduces so much that these companies who are short are scrambling to find shares to cover their short position, and they're unable to do so. So this happens. This phenomenon happens now and again, which actually is why holding long positions, small long positions in small penny stocks, which have a large short base, where hedge funds have big shorts, is actually a great contrarian trade to put on, because you could either, for example, if you put $1,000 on Sharplink, you could either lose 1,000 if the company goes bankrupt, or you can gain, in this case, 2,700%. So there's a huge asymmetric, risk reward by going long in a very small size. Like maybe
that could kind of be a strategy where you look for. I see.
Yeah.
So in this case, the shorts were caught off guard by the news, and the increase was driven largely by them kind of covering.
Exactly. This is what I think, because it's a very small cap equity. The news doesn't really change the crypto structure.
Right.
Ethereum prices would move on bigger news, right? So maybe more real adoption. And since Ethereum's still missing that institutional follow through, without strong inflows or new use cases or some kind of other news, I don't think there would be such a big impact. So I think essentially, I think the causation is weak. The news came out and the price jumped, and
Yeah.
everyone's saying it's because of this, but I don't see that as a strong link.
So it really wasn't a fundamental event
No,
for Ethereum itself.
no.
Okay. So thank you, Prakash. Lots of nuggets to think of there. Anything you want to highlight for folks to look forward to the upcoming week?
Yes. So as mentioned, we have a number of key events. So June itself will be interesting, a very interesting month, because we have essentially these negotiations need to play out before July the 1st and July the 9th on the tariff front. We could have any news regarding the appeal at some point. So the status quo is likely to remain unless there's a renegotiation, or unless the courts upend the status quo. So there's this, which I think is going to be a big narrative in the background. We have the Fed meeting mid-month this week.
Mhm.
We have the ECB meeting, but as mentioned, the cut is fully expected. So I think the more likely drivers will be regarding the guidance, and whether more cuts can be expected or not. And then, of course, we have Friday. We have the payrolls data. Um, so a strong number, like a print above 150,000, with firm wages, likely to delay rate cuts, right? Or rate cut bets.
Okay.
Um, and that could lead to a squeeze in dollar shorts. So a strong number is likely to mean a stronger dollar, but a weaker number is going to increase the likelihood of cuts being priced in, and could trigger more dollar weakness. So probably the market is pricing in some substantial volatility. So option markets are pricing in a decent move by at the end of the week. So volatility remains elevated. Traders, I think, quite cautious. So this will be interesting. This may have some impact on the Fed decision later in the month, but I think the big story will be on tariff policy and tariff related news. So we're likely to see a lot of volatility this month based on that.
Well, thank you, Prakash. We'll be looking out for all of those important events. And for those of you who are looking for to track the economic calendar, you can search for Deriv and economic calendar. We do have that on our website. Thank you again for watching. Remember to hit the subscribe button and turn your notifications on. And if you're listening to us on podcast platform, please hit subscribe. And we will see you next week.
Thank you.